If you had bought gold worth rupees 1 lakh at the beginning of the year, you would be sitting on a gain of 24,000 rupees. That's because gold prices in India have increased around 24% in 2024, much more than the returns by the Nifty or the Sensex. So what exactly drove prices this year? And could you expect similar returns next year? Well, stay tuned till the end of this video to know all about it. Gold prices have been breaking records since the start of 2024. But what has been sparking this massive rally? Geopolitical tensions top the list, closely followed by factors like the US Fed rate cut cycle and central bank purchases. Two major questions arise. How did these factors affect gold prices? And will the rally in one of the best performing commodities in 2024 continue? We'll get all your answers here. At the start of the year, gold prices stood at 63,155.34 per 10 grams in India. As of December 12th, gold prices in India has jumped to 77,582 per 52 rupees per 10 grams. This was a massive 23.7% surge in prices in 2024, and at the highest point in 2024, gold prices stood at around 79,514.56 rupees per 10 grams on October 31st. So what's been causing this surge? One of the key factors throughout 2024 have been rising geopolitical tensions. This includes the war in Ukraine, Iran and Israel tensions, and of late political unrest in South Korea and the fall of the Assad regime in Syria. Gold prices generally rise when there are global tensions or economic uncertainties. These fear-ridden scenarios tend to attract gold lovers or gold bugs. Gold is considered as a safe haven asset and starts becoming increasingly appealing to investors during crisis times as it offers protection. However, in 2024, the situation is a little different. While events like the Russia war in Ukraine and conflicts in the Middle East have played a role to the surging prices, there is another factor. When the West froze Russian assets after the invasion of Ukraine, global markets started to worry. It caused many central banks, especially China, to start buying more gold as a way to protect their wealth and to reduce the reliance on the US dollar. But it wasn't just the governments getting involved. The real driving force behind the gold surge has been the Chinese public. With their own economy facing challenges and growing global instability, Chinese consumers starting buying more gold, both jewelry and gold bars. Other banks at the forefront of this gold buying spree, apart from the People's Bank of China, included the Reserve Bank of India and the Central Bank of Turkey. This huge increase in demand helped push gold prices higher. Another factor that helped boost gold prices was the US Federal Reserve's cutting interest rates. The Fed's first cut since 2020, a significant 50 basis point reduction on September 18. This significant 50 basis point rate cut was the United States of America's first rate cut since March 2020. Another smaller 25 basis point rate cut was announced in November 2024. Interest rate cuts generally have a positive impact on gold prices. On the other hand, when interest rates are high, traditional investments like bonds and saving accounts offer attractive returns. These investments become less lucrative when rates decline and gold becomes more attractive. Rate cuts also often lead to a weaker US dollar. A weaker dollar can boost the sale of gold as it is priced in US dollars. When the dollar weakens, it takes fewer dollars to buy a given amount of gold, making it more affordable for foreign investors. So what's next? With the year coming to an end in a few days, how could gold prices fare in 2025? Well, most reports have a positive outlook. Central banks are expected to continue purchasing gold, ETFs are expected to see more inflows, and continuation of lower interest rates would help boost gold prices. As per Harris Precious Metals, global gold prices could trade between $2,450 per ounce and $2,950 per ounce in 2025. But there could also be hurdles in the way of the gold's rise. It is key to note that the trade policies of US President-elect Donald Trump could dampen the gains for gold in 2025. As per Kotak Securities, Trump's policies of tariffs and tax cuts are seen as inflationary. Lower tax rates would increase US government debt, while tariffs could lead to supply disruptions and hence higher inflation. This could limit how much the Federal Reserve cuts rates next year, and like we discussed before, higher interest rates could reduce the appeal of gold. And with that, we come to an end of today's video. Do you hold gold in your portfolio and do you expect prices to rise going forward? What is likely to be the biggest reason affecting gold prices? Well, let us know in the comments below and stay tuned to NDTV Profit for more such insights.